Hey yo guys, it's your mentor Remy Vince, the only mentor that's killing it. So as I promised you guys that today I'm going to be sending you guys a video about market structure, right? So today I'm just going to be explaining you guys the market structure so that you guys can actually understand what the theory part, what was I actually talking about on the theory part that I sent yesterday. It's your mentor Remy Vince. Pull through with me. Good afternoon, ladies and gentlemen. It's your mentor, Remy Vince, the only mentor that's killing it. So, on today's video, I'm going to be talking about market structure, right? Remember, yesterday in the group chat, I sent the theory part of market structure, but it wasn't related to what we call SMC trading or smart money concept strategy, right? So, today is the day that I'm going to start introducing you guys to the SMC trading, right? So, right around here on my chart I have what we call I have a couple of examples right around here, right? We have the bullish one and the bearish one, right? And we also have some new terms that you guys are going to learn, right? We have BOS, we have double H, we have HL, then we have BOS again, then LH and double L, right? Then we also have what we call CHOCH. We call it a charge or a market structure shift, right? So we're going to start off with the bullish example, right? So remember, whenever the market is trending up, okay guys, so we're going to start off with this bullish example, right? So remember, whenever the market is trending up, the market moves by forming zigzag patterns, right? So as you can see, the market actually was trending up right here. This means this particular example right here was a bullish example, right? So remember, every time when the market is forming zigzags, it forms what we call a higher high, then it also has to form a higher low, right? Then from the higher low it has to form a higher high, then from the higher high it also has to form a higher low, right? So by the market pushing to the upside, this move we're going to call it an impulsive movement, right? And then when it comes back, we're going to call it a correction, right? So this is an impulsive correction, impulsive correction, impulsive correction, impulsive, right? So every time when the market breaks what we call the higher high, right, our recent higher, let's say before this all of this movement actually happened, right? We only had like this double H, or what we call a higher high, right? So the market actually broke this structure, what we call like this. Okay, it actually broke our previous higher high, right? So as you can see, it broke it and then gave us a new higher high, meaning there's a continuation in the trend, right? So every time when the market breaks our recent higher high, we call it a break of structure. As you can see, this was now our recent higher high, then it broke it, then it gave us a break of structure. Then this one also broke it, then gave us a break of structure. This one also broke it, gave us a break of structure, right? Same thing when it happened to the bearish structure, right? So as you can see with this example, the market was actually trending down, right? And I told you that the market, in order for the market to move, it moves in a zigzag pattern, right? So as you can see from here, the market was moving. It formed what we call a lower high, then it went to form a lower low, then from the lower low it formed the lower high, then from the lower high the market had to form a lower low, right? So as you can see, right, the market was actually continuing. This was impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, then an impulse. Then, you know guys, since we're on a bearish movement, the market, this actually shows that the market was actually trending down, right? So as you can see, the market, after breaking our lower low, gave us a break of structure. The market broke it right around here, gave us a break of structure. The market broke our lower low here, gave us a break of structure. The market broke our lower low here, gave us a break of structure. The market broke our lower low here, gave us a break of structure. The market broke our lower low here, gave us a break of structure, right? So that is what we have like in a bearish market structure, right? Then also on the bullish market structure, I think you guys understand it, right? Then we are left with one example that I still need to example, right? That I still need to actually explain, right? So guys, we have what we call a change of character. Okay, so guys, what is the change of character? A change of character, it is the initial shift in order flow in the financial markets, right? So meaning the market was actually trending up, right, forming higher highs and higher lows, higher high, higher low, higher high, higher low, right? But if you can check the market from here, it didn't form a higher low, right? Instead, the market actually pushed down to break our recent highest low, right? That means the market violated the trend. That means there is something that we call a change of character. The market changed character from being bullish to being bearish, right? So the market changed character from going up to going down, right? In other words, so every time when the market violates our last higher low, higher low or higher low or lowest high, right? That is when we're going to have a change of character, right? So this was actually like a bullish example of when the market's changing character from being bullish to being bearish, right? Let's go to the other example. So as you can see, this was a bearish example, right? So if we can check, the market was actually trending nicely, going down, right? Forming a lower high, lower low, lower high, lower low, lower high, lower. You understand, right? So as you can see, our last lowest high, it got violated by the current movement, meaning there was a change of character. The market was no longer going down. That means the buyers, the actual buyers, the buyers were actually entering the market, right? So as you can see right now, the market changed character, meaning this is now our highest low, that is our highest high, highest low, highest high. The market still has to carry on like that, right? So guys, I think you understand what is the change of character. Okay guys, so yeah, we're currently on XAUUSD, which is mostly known as gold, right? And the market structure here has been bullish, right? How do we actually know that the market has been bullish? It's because the market has been going up, right? And remember, every time when the market is going up, it forms what we call like higher lows, higher highs, higher low, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, then higher highs, right? I bet that you are really, really confused because this is not how it looked on the example, right? Guys, like on the example, it was only for just an example. So the markets are not that actually smooth, right? As you can see, the higher highs and the higher lows here, they are actually messy. They are actually choppy. They are actually in the market's way, right? So as you can see right around here, the market gave us a break of structure right around here. The market broke our higher high right around there. Also right around there, market break of structure. The market gave us a break of structure also right around there. Why it took out our recent highest high. Also just right around here. Why? Because the market took out our recent highest high. Also right around here, right? So that means all of those lines that I just drew right around here, they're mostly known as what we call a break of structure, right? Let me just mark them as break of structures. Break of structure, then also a break of structure here, then also a break of structure here, mostly known as BOS, right? So you can see, guys, there were break of structures, meaning there was a continuation in the pattern. That means the market was actually trending up. That means the buyers were in control of the market. As you can see, we had an impulsive. So as you can see, we had an impulse movement right around here. We had a correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse. Then instead of the market actually carrying on with the movement and actually going up, look what happened. The market actually broke our recent highest high, right? Let's check where was our recent highest high. Our recent highest high actually was this one. Let me just do this. Let me just put this one here. Then we had our highest low right around there, highest high, highest low, highest high, right? So instead of the market actually giving us a highest low so that it can continue to the upside, look what the market did. The market actually broke our recent highest low, right, which is this one here, right? Then from there, the market actually broke it, then came back to give us what we call a lowest high. Then it gave us a lowest low, lowest high, then lowest low, lowest high, 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 then lowest low again, right? So as you can see right now, the market actually changed character way by breaking this highest low right around there, right? I don't know if I'm making sense. I don't know if you guys really understand what I'm saying, right? The market changed character by breaking our recent highest low, right? Because from our highest low, we're expecting the market to actually give us a highest high. Instead of the market giving us a highest high, the market gave us a highest low, right? They broke the previous highest low. So yeah, the market actually gave us a lowest low. I mean, sorry guys, not the highest low. It gave us a lowest low, right? Making this one here. Let me just type this so that I can demonstrate to you guys. Yeah, then this one, that's a lowest low. Then let's just also put for the lowest high. Great. So this one here was our lowest high. It was our lowest high, right? This one here was our lowest high. This one here was our lowest low, right? Meaning this one, okay, let me just do this. I just want to quickly okay, this thing's taking forever right now. Let me just put this one here and actually do this. Okay, yeah, we had a lowest low right around the also just around here, right? Let me just move this one to the proper place. Also right around there. Then we had a lowest high right around there, like also just around here, right? Also just around here, also just around here, then also just around here, right? Those were our lowest high, right? Meaning like we had a change of character. The market changed character from being bullish to being bearish. I don't know if you guys can really understand me and what I'm saying, right? So right around here, this was actually like a bullish example of a market structure and how the market can actually change character from being bullish to being bearish, right? I just hope you guys understand. If you don't really understand, please send your questions in the free SMC mentorship group, right? So yeah, it's your mentor, Remy Vince, the only mentor that's killing it. For now, we're just going to go to the bullish example, right? To the bearish example I meant, right? So it's your mentor, Remy Vince, the only mentor that's killing it. Okay guys, so we're gonna be looking for the bearish example. We're gonna be looking at the we're gonna be looking at USDT, right, on this particular section here, right? I just want to show you guys that how the market actually changed character and how the market was actually moving, right? So we're gonna start off by identifying the trend, right? So as you guys can see that the market was actually trending down. This was an impulsive move, correction, 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 right? An impulsive move, right? Instead of the market actually having to correct, look what it did. It broke our recent lowest high right around there. It broke it, which is telling us that there is a change of character. The market is changing the character from being bearish to being bullish, right? So look what's happening. From there, the market actually formed, so meaning this is no longer our lowest low, right? This is now our highest low. Then this is our highest high, highest low, highest low, highest high, highest low, highest high, highest low, highest high, highest low, highest high, highest low, right? I think you guys can see it right now, right? And remember, every time we have what we call a break of structure. A break of structure is what you use to confirm that there's a continuation in the trend. We have a break of structure right around there, we have a break of structure right around here, also here, and also here, right? And also right around here. So break of structures were actually confirming that, you know what, the market is still going down. The markets are still continuing to go bearish, right? So, and then we also had what we call a change of character right around here. What we call a torch, dotted line, great. So we had a change of character right around there, right? So a change of character tells us that the market is no longer going down, but upwards, right? So guys, I think you guys can actually understand this by now. I explained impulsive and correction, break of structure, change of character. That's it for the day, guys. It's your mentor, Remy Vince, the only mentor that's killing it. Signing out.
Ayo, for any questions, please do send me a text on 060-721-0873. And please, most importantly, please don't forget to like and subscribe. It's your mentor, Remy Vince, the only mentor that's killing it. Signing out.